This is the AI News Flash for May 28th, 6 a.m. UTC. First up, Reuters exclusive reports TikTok parent ByteDance is developing custom CPU chips to support its AI rollout, according to sources. This marks a decisive moment in China tech giant's AI semiconductor in-house development competition. ByteDance custom CPU chip design strategy aims to optimize integration with NVIDIA GPUs and custom AI accelerators, building computing infrastructure for large-scale AI server workloads, and structurally reducing data center operating costs. Against the backdrop of U.S. hyperscaler four-company combined $725 billion 2026 capex boom dominating AI infrastructure, this joins Alibaba's M6V chip, Tencent custom silicon, and Huawei Ascend AI chips as part of China's accelerating AI semiconductor independence drive, building a complete self-sufficient AI ecosystem under U.S. export controls. ByteDance's planned up to $700 billion 2027 AI capex with Doubao, 145 million DAU, and TikTok's 1 billion monthly users, creating massive AI implementation potential, combined with custom CPU development, reducing dependence on NVIDIA and Broadcom, marks a key dispersion of U.S. dominance in the U.S.-China AI semiconductor hegemony battle at the custom chip layer. This positions 2026 as the most important pivot point for China AI semiconductor independence. Second up, Bloomberg exclusive interview reveals famous short seller Carson Block, head of Muddy Waters Research, is significantly rethinking India investment plans due to AI risk concerns. Global institutional investors' regional investment strategies are being impacted by the AI disruption wave. Block warned about structural concerns over AI agent replacement risks in India's IT outsourcing industry, pointing out the AI disruption vulnerability of major IT companies, TCS, Infosys, Wipro, and HCL Tech, and concerns about direct impact on India's $300 billion outsourcing industry and 6 million jobs from AI-native transformation. India's Nifty IT index has plunged over 19% year-to-date, the largest monthly decline in 23 years, with TCS losing $6.8 billion in market cap. This aligns with Khosla's 5-year obsolescence warning, prompting global institutional investors to fundamentally reevaluate their India IT investment thesis as a concrete example of IT services industry AI native disruption.
Against MSCI Emerging Markets Index showing Taiwan 21%, China 20.93%, and India's reducing weight. Block's formal rethinking of India plans, backed by his historical Muddy Waters track record, including the Luckin Coffee Exposé, carries significant influence. Under the hyperscaler, four-company, $725 billion 2026 capex boom, the AI disruption wave is fundamentally rewriting global institutional investor allocation strategies, positioning 2026 as the most important pivot point for emerging market AI disruption investment strategy.
Third up, Reuters reports, foreign investors bought Japanese stocks for an 8th consecutive week amid the ongoing AI rally. Japan AI-related stocks are seeing decisive institutional investor capital allocation, marking a symbolic milestone. Foreign investors' 8-week consecutive buying of Japanese stocks represents a record-level streak, with the Nikkei average hovering around its all-time high of 58,583 yen. The rally is driven by three pillars: AI, semiconductors, energy, and robotics, led by symbolic examples including SoftBank's OpenAI investment TSMC Kumamoto plant, Advantest, Kioxia, and Fujikura semiconductor-related stocks. Under the AI semiconductor supercycle full swing, the Japanese market is emerging as a key third pillar, with Kospi up 44%, Taiwan up 22%, and Nikkei up 15%, representing Asian AI-related stocks surging, contrasting with U.S.-concentrated AI investment themes and accelerating global diversification. In the U.S.-China AI geopolitical hegemony battle, the Japanese market is being positioned as an alternative destination for institutional investor allocation.
Aligned with MSCI Emerging Markets Index, Taiwan 21% overtaking China 20.93% for the first time. Global Fund Asia AI-related stock capital is massively shifting. Under the hyperscaler four-company $725 billion 2026 capex boom dominated by U.S. AI infrastructure, Japan's AI-related corporate business is being substantially impacted, with Fujitsu AI implementation, Rapidus 2 nanometers advanced semiconductor manufacturing, and Fanuc AI-controlled industrial robots aligning with Japan's unique AI strategy. This positions 2026 as the most important milestone for Japan market AI investment theme.
Fourth up, Bloomberg exclusive feature reports African startups are pivoting to inward strategies as the US AI boom drains global venture capital, marking a decisive moment of geographic VC investment bias and serious impact on emerging market startup ecosystems.
USAI startup investment hit a record $189 billion in February alone, with venture capital over 90% concentrated in AI-related deals, creating structural bias. Meanwhile, African startup ecosystems face dramatic decline in global VC capital inflows, with AI tech hubs in Nigeria, Kenya, South Africa, and Egypt symbolically pivoting to domestic capital-dependent strategies.
Aligned with K-shaped polarization concentrating 83% of AI startup investment in top 3 companies. Global AI investment capital concentration is structuralizing. While NVIDIA, OpenAI, and Anthropic approach $1 trillion valuations driving frontier model development, Africa's 1.2 billion population market faces urgent AI implementation needs amid deepening fundraising difficulties, highlighting the technology gap widening with the Global South and challenges of equitable technology access.
Aligned with UN SDG achievement threats pointed out, African indigenous AI model development is accelerating with Swahili, Hausa, and African language LLMs. Under the hyperscaler 4-company $725 billion 2026 capex boom dominated by U.S. AI infrastructure, Africa's independent AI ecosystem building and domestic capital mobilization is accelerating, positioning 2026 as the most important pivot for Global South AI investment geographic diversification.
Fifth up, Forbes reports Tencent's AI agent, WorkBuddy, is officially beginning global expansion, fundamentally rewriting the AI agent market landscape and marking a symbolic reversal milestone in the China AI agent versus US-dominated trend. Tencent WorkBuddy desktop AI agent platform launches officially positioned as an AI intelligent workplace assistant, automating business tasks including data analysis, document creation, and table management. With WeChat, QQ, and Tencent meeting integration for enterprise deployment, the platform begins its full global market offensive. Among China's AI Big Three with Alibaba Qwen 3.5 and Wukong, Tencent, Hunyuan, and ByteDance Doubao driving the China AI agent market, Tencent WorkBuddy's global expansion represents a symbolic challenge to OpenAI, Anthropic, and Google's dominance of the AI agent market, marking a decisive moment in the US-China AI agent hegemony battle.
Against Microsoft Copilot plus Agent 365, Salesforce Agentforce, and Google Agent Space, driving the US-dominated enterprise AI agent market, WorkBuddy's global expansion under Gartner's prediction of 40% enterprise apps having AI agents by end of 2026, combined with the structural fixation of US-China AI agent market split and Shenzhen Longgang's world-first OpenClaw agent ecosystem policy subsidies, positions 2026 as the most important pivot point for the US-China AI agent market hegemony battle.
That's all for this AI news flash.